Hi. So, hey, Serena, how are
Hey,
you?
Shay, I'm good. I'm
Good to
good.
see
How you
you.
doing? You
Pretty good.
too.
Pretty good. So, I know it's been a while, but I'm glad we're coming back together. So, I am Shae Brown. I am a realtor in the Atlanta metro area with Better Homes and Gardens Real Estate Metro Brokers. And I am working here today with my partner. I'll let her introduce herself.
My name is Serena Galloway, and I have a lot of hats, but my main hat is insurance. I'm an insurance agent, and I own an insurance agency. And I really offer all insurance products, auto, home, life, health, Medicare, you name it. If it's insurance related, I offer it. And I also do mortgage lending as well.
Awesome.
I'm
Awesome.
in the Houston area, but because I'm from Georgia, I do also offer most of my products for the state of Georgia as well.
Okay. And that's a good point, too. So, you are licensed in, is it Georgia and Texas for
Mm.
insurance?
Yes, Georgia, Texas, and Louisiana as well.
Okay, awesome, awesome,
Yeah.
awesome. So it's good to know those credentials because what we want to do is today we are going to talk about another topic. We have another series that we launched a few months ago, and I'll post a link to that so you all can go back and look at that. But want to talk a bit about insurance products, particularly insurance that can have some additional benefits, such as paying off your house or having some investments tied to it. So I get a lot of clients who, talk about, hey, should I get this insurance even before they buy a house? As they're planning, should I get this insurance? If something happens to me, I want my kids to be able to have this house. I heard about this policy that if I die tomorrow, it'll pay off my entire house to my kids and they won't have to worry about anything. And hey, it sounds great and it may be, but I know that it depends on, reading the fine print. Does this policy really cover it? Are there any that would cover it that, easily? What are the basics? So what can I tell them when they ask me that kind of stuff?
Okay. Yes, so the insurance is called mortgage protection insurance, and most mortgage companies will offer it. It's one of those things like soon as you buy the house, they'll send all this paperwork out to you, offering the insurance to you. Now, I won't tell anyone don't get it, but what I do suggest is getting a term policy outside of the mortgage company. And the reason for that is just for example, so if you purchase it through the mortgage company and say, let's just say you pass away 5 years later, okay, they'll pay the house off as designed, no issue. But if you get a term policy for 300,000, we're going to say the house is worth 300,000, and let's say you pay into it, you pass away 10 years later, you will be able to pay off your balance and have some additional money that could be utilized for other things. So it's almost a two for one if you get the term that's specifically valued at the same amount of your mortgage, but as you're paying down your mortgage, you still have this policy with some extra funds. And so that could help your family as well. So I always suggest going the term route versus getting it through the mortgage company.
Interesting. Okay, so getting it through the mortgage company, those are, legit products. They can provide a payoff. Are there really strict terms? Like, is there, a certain time of death, certain type of death, certain beneficiaries, or is it really just cut and dry? You know,
It's
that
definitely going to be nothing is cut and dry. We know that, right?
happens.
So, um, a lot of times there are health questions that are asked in the process. I mean, yes, they're going to, do what we call, they're going to give you a rate like, oh, it'll be $12 a month, but ultimately they will still do a health screening, and that's why I say just go ahead and go with the term policy because it's going to. A term policy is going to require the same thing. You're going to have to answer the health questions and you'll have that additional benefit. If you pay the mortgage protection insurance through the mortgage company for 30 years and the house is paid off and then you pass away, I mean that money is just money you paid. But if you same thing happened with the term policy, 30 years later you don't pass away for 40 years, then you still have, depending on the length of the term policy, you still have that policy. So because the term policy can be converted, renewed, things like that. So you could use it for, I'm always looking at what can I do more than just what the benefit of the policy is. Can I do something else with it? And so that's why I do suggest the term policy.
Okay, so now that's another good point you made too. So if you pay that house off and you've paid that insurance for however many years, it's just gone at that point. You're not going to get
Right,
anything back. If
right,
you were to, let's say you sell that house or something like that, same thing. That money is just gone at that point.
right. Exactly. But if you have that standalone term policy, it doesn't matter. You sell the policy, you still have that policy because it's not tied to that specific mortgage. It's tied to you and it's your policy.
Mhm. What's the benefit of one over the other financially? Does the mortgage protection insurance tend to cost more in terms of premium than term life policies may?
Well, really, the mortgage protection insurance through the mortgage company may be less, and I say that loosely, just because I don't have mine set up that way. I don't know many people that do, so it'd be hard for me to say, oh, 100% theirs is going to be less. I would say weigh both options. So if you check with them and you're just worried about the mortgage, nothing else, you're not concerned about, any extra money or debts or any of those things. I mean, it could be beneficial. But if you're looking at the big picture and you may not even stay in the house, you may move to another house, kind of like what we just mentioned, the term policy would definitely be more beneficial. And
Hmm.
we get what we pay for. So if it is a little bit more, because term policies by nature are just less expensive than a whole life, and we may touch on that a little bit later.
Mhm.
And so if there is a difference, it shouldn't be substantial because you want to look at the whole picture of what your needs are.
Okay. And that makes sense. So let's go ahead and touch on that. So
Okay.
at a high level, or if you want to go deep, because I know you need this.
Okay.
So what
Okay.
is the
Okay.
difference between, is it term versus whole life insurance?
It is so term is term, which goes for a term. So it can be, I mean, I have some carriers that go as many as 45 years, but the standard time is usually 30 years. A whole life policy is also referred to as a permanent policy because it goes for your whole life. I mean, I have some that stop at 100, some that stop at 120. I mean, we would love to live to 100. I mean,
Mhm.
ideally, most of us don't. So
Mhm.
those policies do go for a longer period. And so, but whatever you start at, that's why I always suggest people if they're going to get it when you're younger, because if you're paying $100 at 25, then that's what you will be paying at 85. So it
Mm.
doesn't change. So that's kind of the benefit to those permanent policies over the term policies. But when we're talking about price, the whole life policies can be a little bit more expensive.
Okay. Would you recommend a whole life policy over mortgage protection insurance just as much as you recommend a term life policy over
I
that?
would, yes. And this is what I say because I know there are agents, financial advisors, whatever their role may be. I don't discredit anyone that
Mhm.
say, oh, just get this, just get a term, just get a IUL, just get I'm not one of those agents. Like we really have to sit down and talk about what your needs are, like what your goal is, what you're trying to accomplish financially. And then from there, make a decision on should you do this term or should you do something more permanent. But I'm definitely an advocate for getting the policies while we're young. I mean, I really just can't stress that enough. I probably would get on a really big soapbox if I talked about it to the depth of how I really feel about it. But don't wait because yes, when people are saying, "Oh, it's too expensive," yes, because you're 55.
Yeah.
So we have to know these things and get into these things when our health is good, the chances of passing away are not as high because that determines what the premium will be.
Mm.
But I mean, if you get in later and you have to, go the term route because it's less expensive, or you just got to get a final expenses policy because you just waited and that's what you can afford, get it. But don't just not have anything and don't say I don't know and make that a reason why you're not getting it. No, we can't. We
Mhm.
we just shouldn't still be singing that narrative. It's just too many resources out there, too many people. You can find one person I know that you trust
Hmm.
to help you out if you truly don't understand and you're just afraid to dive in because you don't understand.
Well, hey, that's why we're here for people.
Yes, that's
That's
right.
why we're here. Like
That's
I
right.
tell people all the time, like there are some real estate clients I have that, or people that are prospective clients, they turn into clients. It might take a year. We might talk on and
Right.
I'll send them information because the timeline is so important for life, but it's, the
Yes.
plan of getting there. But there are so many related, issues that come up, especially, before you get to closing. Of course, you have to get an insurance quote for your house and you have to reach out
Yes,
to
you do.
insurance carriers. You have to know what coverage you is the best for you to get, what
Mm-hmm.
deductible, that actually impacts your underwriting because, depending on how much that's going to be, they want to know that too, what
Right.
the expenses are going to be. So it's so related, when those things come up. So that's why I like these chats because it can give
Yes.
information to people and it can help folks that, especially with you having that real estate background, it can help a lot of people make better choices because
Yes.
you
And that's
mentioned
what we
one thing
want.
about that. Mhm.
Yes, that's exactly what we want. We want to, want everyone to have the information that they need to make the best decision. And the real estate transactions can be, really tedious and they can be overwhelming. So just having the right people on your team, like you and me, to help, make those decisions, like that'll make it a smoother transaction.
Yes, yes, it will. And like when you think about the deeper purpose of things, why we do the things we do, it's beyond just the business transaction or, making money from it. It's how do I help people? How do I serve? And so
Yes.
getting that information out to them is so important because, I've had people come up and say, well, I thought this policy was going to do whatever. And I was told that I could get this and it'd be like an investment and I can borrow against it. And then as long as it didn't matter if I put it back and it still be there and then they needed to use it and it's
Mm-hmm.
fine
And it's
because
not what it is.
it's not
Yeah.
what they thought it was. And like you said, nothing is free. You pay for everything. So, there's no get rich quick thing. You have to
Right.
read, the fine print. Is there a way for people to, hmm, this is probably crazy to be asking an insurance
Says
professional, but
no.
is there a way for them to get around reading all the fine print, but still make sure they get the information they need?
I'm gonna say no. I'm just going to
I
say
think.
no. And I know it can be taxing because I have a life insurance policy I just wrote the other day. When it was written, they ended up with 86 pages. But all of the information was important. So what I usually tell my clients is, take a moment, read through, we can hop on a Zoom call, go through it together, even if I sold it, because I still want to make sure you understand. And to your point about, clients purchasing policies and then saying, oh, well, I thought I could, borrow from it, or
Yeah.
this is what I always tell clients. So they'll say, oh, I had this policy for 15 years and I looked at it and I only had $3,000 invested. And I'm like, but your policy was $30. So
Hmm.
if the math needs to make sense, like you won't be a millionaire if your payments and the money that you put into the policy, even if you're invested in stocks and other things like that, the math still needs to make sense. So you definitely have to look at what you're paying. You definitely need to read the fine print because it's all spelled out in
Mhm.
the life documents as far as what year, like year one, this is what money you'll have. Year seven, I mean, it goes all down the list all the way to the end of the policy. So that should be included in any policy where someone is saying this policy builds value. There will be a page, and sometimes it's pages, sometimes it's a book, but it'll tell you, oh, at year seven, this how much money you'll have if you never borrow against it. And if you're looking at that number like, oh, I want to have more than that in 15 years, then that's when a conversation needs to be had about what you can do differently, what amount of money needs to be invested to grow it the way that you desire it to grow.
That's a good point too about, having people thinking about reading, even if it's certain pages, because I know sometimes they'll have like amortization schedules and some of the paperwork
Mm-hmm.
fit for,
Mm-hmm.
purchasing a home. And if they don't pay
Yes.
attention to that, and I've worked with clients before where it's almost as if lenders or agents intentionally didn't want them to read stuff. And
Mm-hmm.
so from the
Mm-hmm.
start, I'm like, hey, here's your disclosure. Hey, I am not a lender. I am not an insurance person. There are some questions I can answer. Let's get on a call and talk through it if you don't believe
Yes,
anything, because the numbers on there are the numbers you're going to have to be responsible for. It's not a guess. It's not a, oh, it can't be that much. I didn't think it'd be that much. No, if it's on that
it's
disclosure,
what it
it's your best bet.
is.
That's pretty much what it's going to be. And if it says you got to
Right.
bring $25,000 for closing, that's what you got to bring.
That's what you have to bring.
That is no
Yes.
joke. So if you want to get to closing, let's talk through. Maybe we can, have a strategy to figure out another way to get some concessions from the seller or from the lender or something like that. But these numbers you are responsible for, and it's similar to that, right? Like
Yes.
real estate contracts, most of them, the basic purchase and sale is about 10 or 11 pages, but it's a lot of
Hmm.
information. And if they don't sit and read through it and they think, oh, well, you're my agent, you're supposed to read it. I know it. I know it front and back,
Yeah.
but
Right.
you're signing your name to it too. So you have to partner with me and you need to know what you're signing, because there
Absolutely.
are protections built in here for you. There are certain forms we use to make sure you have those protections. But if you don't understand those protections, you're going to be living in that house and paying that mortgage.
Yes.
You're going to be paying that
Yes.
insurance policy every month, and you're the one that may have to cash in on it at some point,
Absolutely.
you know,
Absolutely.
or leave it to
Yeah.
your loved ones, and they need to understand what to do with that insurance. And I think insurance is great. People have to know what they're using it for. And I think sometimes we try to use it as savings accounts, and that's not
Hmm.
always the best. What do you think
Correct.
about that?
Yeah, I agree with that. It can be used as a, investment tool. I mean, I don't know, because I have some clients where they're like, okay, I'm gonna write this policy for my child. So, and in 20 years, I want them to have enough money for a down payment on a house.
Mhm.
So and then I want to take this policy, I'm going to buy it. I want to invest some of it in stocks or ETFs, just
Mhm.
different, not to get too complicated. And so I anticipate that based on the growth value that in 20 years they'll have this $50,000.
Mhm.
It can be used as such, but I wouldn't advise it to be the
Mhm.
only method. But it can be a saving tool if you have a specific goal.
Okay. We're going to have a session on that because because I do get that a lot. And you have different types of, I'll say, programs out there that people get approached
Hmm.
with. And it's not always, I'm not going to say it's not legit, but it's not always very clear, and it's not always what they think it's going to be. And
Right.
sometimes it's like, robbing Peter to pay Paul. And so I
Hmm.
think it's just really important for people to have an understanding, and knowledge is power. Knowledge is power. There are so many videos out there that just want to get clicks. And so they're just talking about all this stuff. And people are like, oh, what I heard, if you do this, that all you have to do.
Right.
I heard I can put a house in my business name, and your business has been around for a year and you haven't produced any income from it.
Right. And they tell you still got to pay 20, 30%, and the interest rate gonna be 1,500%. Look, they didn't tell you that part. They just said you can do it. I mean, you can do anything you want to do, but what are the consequences of that? So that one is really a good point. Put my house in my business name. You can, yes, you can. But like you said, you got to prove money. You got to
Yep.
prove that you had the money, and you also got to prove that you had a stability. So it's not just like, oh, I got a business, I can just run and put my house in the business name. It's way more complex than that.
Yes, and you have the lending angle, you have the insurance angle, you have the real estate angle. We have
Mm.
some more topics we're going to have to cover in later sessions, because it's such good information. It's so good to hear. Like every time I talk to you, I learn something. So I'm over here in the back of my head, like, oh, okay.
Good,
Just
good.
absorbing it. And that's just really good. So thank you again. Again, this is Shae Brown. I'm a realtor in the Atlanta metro area with Better Homes and Gardens, Metro Brokers Real Estate, and
Serena Galloway with Galloway Agency in the Houston area, but a Georgia peach as well.
and I'll put our contact information in the chat. Thank you, Serena. I'll see you next time.
See you next time. Bye.
Bye.